All right, guys. Today we have GameStop earnings as well as C3 AI earnings. We're probably going to cover C3 a little bit more, but we're still going to be covering GameStop as well. C3 actually on a really red day of the market. C3 actually fighting back a little bit. It's still kind of flat, but we'll take a look at that right now. Hold on one second. We also got GameStop up on the left side here. GameStop is has had a little pullback the last couple weeks really here. Let me pull this up. And you can see all of that right there. Let's get some music going. And yeah, go back to some old music here real quick. Hold on here. I got this old playlist, man. This playlist is like years old. But yeah, you can see GameStop at 1860s, C3 at 3170s. We're also going to be covering like Nvidia as well. All right. Let's get this rolling. Again, this is Q1 earnings for C3. So today we have C3 AI earnings, GameStop earnings. I don't think GameStop is actually doing an earnings call, but they're going to drop their earnings report. So yeah, both are going to be after the closing bell. We'll zoom in a little bit here. Yeah, we got about 5 minutes. What's up, Liv? What's up, Bills? What's up, Hannah, Bob, Kay? Again, definitely a red day. The SPY is down. You can kind of see GameStop on the left side here. We also have Nvidia. Nvidia at 470s. The question is, how much is this influence? Like Nvidia is kind of one of the big pullbacks today versus everything else. The question is, how much does this influence the rest of the market? So like C3 is a big AI company that a lot of people know about. Again, the question is, how much is its earnings going to influence the rest of the market? That's something that, y'all can, y'all's best guess is as good as mine. The SPY is looking okay today. It's still pretty red. It dipped all the way down from 449 to 445. It's not down to the 430s yet, which is kind of, in my opinion, where alarms should start going off about another big pullback. But it's still at 446. It definitely had a decent pullback today. Although if we look at like Tesla here, Tesla originally had a pretty red day, like a really red open, but it's since bounced back some. So we're actually still green over the last couple days on Tesla. SPY sitting right around 446. What's up, Yair? As well as C3 Tesla. Sorry, let me mute this. There we go. Yeah, definitely a red market day for sure. But again, you got C3 on the right side here. Let's see what Twitter shows regarding these today. GameStop is the big one, man. That's kind of what a lot of people are going to pay attention to. We're definitely going to cover it. Yeah, the question is, like, Nvidia's already had a pretty rough day, man. And so hopefully this comes and saves the market. Got the poll on Twitter. Bull Bear. We'll do this for 2 hours. So we got this posted. If you want to vote on this Twitter poll, here's the link right here. You can check it out and vote on the poll. LNQ. So the earnings come out after the closing bell. Each one has different reports. So I'll put this up on the screen so you guys can see it a little bit better. C3. I believe it's at 4:15 p.m. Eastern Standard Time. GameStop is scheduled for 4:05. Kind of see that right there. What do y'all think? What's the best stock for today's earnings? I mean, we're going to watch Nvidia. Nvidia's down a lot. You can see Nvidia on the left side here. It's at 470s. C3 at 3160s. Might be interesting. Again, it might have some AI influence. Is the thing to watch. Like there might be some AI influence here. I don't know which one's going to make an upside or downside. I really don't. No, nobody really does, you know. So like, I'm not sure what they're going to do, whether they're going to be up or down, good or bad, green or red. I really don't know. So we'll have to wait and see. Definitely a red day though in markets. Yeah, I'm looking at C3. We can look at the expected numbers here too. So here is let me see if I can pull up the graph for their earnings on macro trends. So again, here's macro trends. We can type it. So here is, I believe this is EPS. So yeah, this is EPS. And so we can type in AI right here, and we should get C3 AI right here. So here is their EPS graph. So their trailing 12-month graph is pretty rough, to be honest here. But if we look at their quarterly graph, you know, ideally you want to see them start to make more profit. So it's still a brand new company. You know, you can see yearly on a yearly perspective, they only recently came out in 2027. And so, yeah, or in 2020. So they're only 4 years old. Less than that maybe, but yeah, under 4 years old. You can see their quarterly graph, you know, as the company's growing, they start to spend more money. We want to see this graph as time progresses to go back down like this, though. Like, we don't want them to keep losing more and more and more and more because EPS is profitability, right? So EPS is a gauge on profitability. Now, if their revenue graph looks better, let's take a look. So that was their EPS graph, which is, again, profitability. Revenue is kind of like the ceiling they have, like how much money they could potentially make. EPS is actually how much, like what their margins are actually like. So if we look at C3 again, but in this time in terms of revenue, yeah, you can see the revenue is looking much better, which means that they're spending money on stuff. Like, they're not just living off of bonuses. Their quarterly revenue has been rising each quarter for the most part. Since they were founded, right? So this is a good sign. Like, a trending up graph like this is a positive sign. It just means they're bringing in more and more money each quarter. Now, the yearly one is a little bit worse, but again, they only recently came out like in 2020, 2021. So C3 is still a brand new company, but it's definitely interesting to watch. So today they are expecting 71.59 million in sales revenue, right? So 71.59 million. This was about 26 million or so. And so, yeah, you can kind of see the same thing here where they're expecting roughly the same quarterly revenue, it looks like here. So roughly the same quarterly revenue is what they're expecting. So the quarterly revenue will be about even. And yeah, that's basically C3. Now we can look at GameStop. and see what where GameStop is trending. Here's the thing about GameStop is that, like, the problem with physical copies of video games is that, long term they're trending down. So like a really bad sign for a company is when their revenue long term, this is since 2009, that's a bad sign. Same thing here, quarterly revenue, you can see that's trending down as well. And so again, not a good sign necessarily here for them, for GameStop. Doesn't mean anything yet. It doesn't really mean much, but we'll see what they do. Polestar is a pretty obscure company. It's just risky to put too much money in it, brother. Be smart, be careful. Looking at our Twitter poll here, we got 20 votes or so already. 60% are bullish on C3, 40% are bearish. I guess we'll go ahead and do a GameStop poll as well. GameStop, I think it's Q2. Sorry, guys. My dog is just, got a contractor here doing some stuff, so. All right, so again, we'll go ahead and do this. Again, do me a favor, guys. Hit that like button real quick if you can. We definitely appreciate it. All right, so we got our GameStop poll on Twitter as well. If you haven't already, hit that follow button there. We appreciate it. We still got, 45 minutes or so before C3 actually releases theirs. Nvidia is still falling down. Again, C3 is actually testing. You can see the previous closing price, which is the level at which it goes from red to green, green to red. You can see that level right now. We're basically slightly above that level. So we're slightly green on the day. For AI, we're at 31.45s right now for C3. And so, yeah, we're slightly green on the day, but mostly a flat day leading into earnings. We'll see if the market starts to get some bearings and actually run a little bit. And yeah, we'll see. We got GameStop. Again, GameStop at 1850s. So if we put GameStop up here, the real question is how much does C3 influence Nvidia and other AI stocks? Because there's a lot of them now. So that's the real question is. C3 contracts are pricey for the next week and not a very good open interest. The dog, so maybe Andre. Yo, give me a piece of your mind. Which one, GameStop or C3? Just speak out loud. I want to bet for it. There's rumors of like GameStop having some big announcement in this earnings report. I'm not sure if it's actually true or not, but there's been kind of rumblings of that. I don't know if it's true or not. There's usually some type of crazy conspiracy / rumor going on each major report with this type of stuff. But I think if we're looking at it company to company, I think C3 has the most potential moving forward than GameStop. GameStop really has to do a full pivot of their business model in order to actually succeed, because as time progresses, people are going to purchase physical copies of video games less and less, which means that people will have less of a need over time for GameStop. Aside from console sales, which, is probably not trending that great as well. And again, I like GameStop. I hope it succeeds. So please don't hold just these facts against me, which, just shows emotion. Again, I hope it goes up, but I think GameStop has a bigger uphill battle to climb versus C3, which AI stocks have done exceptionally well over the last year or so. Hey, what's up, Bulldog? What's up, Smokies? Yeah, consoles might go away too. They might just do cloud services or streaming, which is really probably the future of all this stuff. It's probably like streaming / cloud gaming. But we'll see. And again, what do you guys think? Here, let me do a poll. Are you bullish or bearish on C3 AI's earning report or call? That'll be the poll. Vote on that poll. Let it go live. Again, bump that like button up if you can. We definitely appreciate it. Yeah, we'll see if what happens to consoles. Again, C3 is expecting a 17-cent loss per share. So a 17-cent loss per share on 71.59 million in revenue. GameStop is expecting 15-cent loss per share on 1.14 bill in revenue. Just off the bat, like what I see here initially is that they're pretty okay. I see C3 is losing about the same as GameStop margin wise for EPS, right? C3 has a 17-cent loss per share expectation versus GameStop's 15-cent loss per share, but roughly in the same ballpark there. But that 15-cent loss per share on GameStop is on 1.14 billion in revenue, right? So they are basically having the same margins as C3 with much more revenue, right? Which means that they're bringing in more revenue, but they're profiting about the same as a C3 AI. C3, on the other hand, again, has about the same as GameStop, but they only have 71.59 mil in revenue. So that's something else to consider. We also have ChargePoint Holdings today, which is kind of like an EV related company, I believe, if I have that right. ChargePoint is... yeah, the EV infrastructure company based in Cali. They operate the largest online network of independently owned EV charging stations in 14 countries. So EV related. So again, today's a big day for AI and EV, related stuff. So you can see C3 just popped back over the previous closing price, back over that spot. GameStop still at 1860s. GameStop looks a little bit less liquid than C3 as well. But also, GameStop's not actually doing an earnings call from what I understand. Like GameStop's not, that's the second time in a row that GameStop's just not doing an earnings call. I'm not sure why, I'm not sure why they're not doing it anymore. They're not doing their I'm not sure why they're not doing their GameStop earnings call, but hey, it is what it is, Is AMC down to 85 cents? Is it really, bro? I haven't even looked at it. Oh my goodness, man. Wow. NPC streams. I saw that, man. Yeah, I mean, I feel you. But man, GameStop, oof. Or no, AMC, man, just getting destroyed. The rest of the market's down too today, but it's not. It's kind of a flat day aside from AMC, which is down freaking huge percentages. AMC's down like 30% today. So just a ridiculous drop. Cloud gaming requires good internet, which most people don't have, but that'll progress over time. Like cloud, the internet's going to progress over time and get better and better and better. Like I remember when DSL first came out and like it was so fast relative to what I was used to when like I grew up when dial-up was still a thing, right? When dial-up was still a thing, I remember using the internet with dial-up, you know, and then my mom got like DSL. And then that was like a game changer. Point is, over time, the internet gets better. It gets faster, right? Like now, if you don't have 100 megabits per second, both upload and download, you're like certainly in the minority there of people on the internet, you know. And that it used to be like 15 was good. It used to be like 15 megabits per second was good. Now I got a gig up and down fiber optic, and that's just going to get better, and it will for everybody else, which means that like over time video games will evolve to be more cloud based because we have the capabilities to do so. You know, especially with stuff like Starlink, satellite internet getting better and better and better. Like there's just a lot of avenues for people's internet. Yeah, AMC's struggling. Yeah, AOL, also known as you ain't online when that phone rings. Oh, for sure. My mom used to get so mad if I picked up the phone while she was on the internet. My mom's a gamer too, believe it or not. Like my mom likes I want to say it's called Canasta. Is that a game? Yeah, Canasta. My mom likes Canasta. You know, I should know, man. I'm like a poker player, but my mom's like a card player. Anyway, SPY at 446s. So SPY starting to come back. We're slightly over the volume weighted average price, trying to break that trend. Again, you can see C3 on the right at 3150s. You can see GameStop on the left at 1860s. So we're trying here. We got a bunch of votes too on Twitter. Again, hit that like button, guys. We got 22 likes. Impression technology tech gets better, yeah, for sure. Supposed to keep seeing Equalizer 3 this weekend. I hope it's good, man. I didn't like the second one. I like the first one. The first one was dope. Second one, you know. We'll see if AMC can bounce back. AMC's been in some turmoil, dude. Just rough. Wow, just to put this into perspective, here's AMC on the left side. What a drop. I'm not going to say I told you so, but, you know, I don't even think I need to say it. Hey, what's up, BG? Yeah, all good. Hey, thank you so much for the like. I appreciate it. Yeah, it'll grow. It'll grow as the stream grows. We'll get at least over 1,000 people here for this. So we'll get some people here. I just start the streams early. You know, I always start them early. Hey, good luck, Sky. Yeah, just be careful, Sky. You know. Again, SPY at 446. Let's see if it goes green today. Again, I didn't realize how much AMC was down, man. That's a rough dip for AMC, man. That's a drop. What a drop. Looking at our poll number, 67% of people are bullish on C3, 33% are bearish. Again, we'll see what they show. We still got 20 minutes before the market closes, and C3 earnings aren't supposed to come out until 4:15, I believe. So we still got a couple minutes. Can I set a stop loss in aftermarket? Not a market stop. It'd have to be a limit stop, which are unreliable at best. So, I mean, you can set one, but it's not going to be a reliable one because it's not going to be a market stop. You know, basically, a market order gets you filled immediately at whatever price it can, which is the best price it can, right? But it fills you immediately no matter what, even if it takes a hit in terms of, like, entry. A limit order has to get you filled at that specific price or better, right? And so when you're using a stop loss, you don't want a limit order because sometimes stocks can move quickly and for whatever reason you just don't get filled, which means that like if a stock drops fast or moves up fast, your stop can just not get hit. And that's risky, you know. So because of that, you know, you can try to use a limit stop in after hours, but it's not going to be as effective as just getting you the heck out when you need to get out. And you know, and especially with earnings, which have big fluctuating percentages, you know, I would be careful. Yeah, I mean, it's a big dip in Apple, but you also got to see, like, Apple's moved up since August 18th. So Apple was at 172 or so on August 18th. And so over the last couple weeks, it's basically fought all the way back to almost 190. And now it's dipping back to 182 or so. And so it's kind of one step forward, two steps back type of thing. Stocks aren't going to go straight up. Yeah, C4 comes out again at 4:15 or so is when the schedule is. Path, UiPath is scheduled for 4:10. I don't know much about that company. We got Dave & Buster's as well. So we got some other stuff too, but we'll cover. I don't know about when the sell-off is going to continue. I really don't. I'm not really sure at all there. I think markets pushed up a lot over the last year and everything, including Apple. And so, you know, I'm not sure. All right, C3 mostly flat here in anticipation of this. AMC still at 870s, 869, 870s. And again, we're going to stream the full call and report. The GameStop report's interesting too. GameStop's supposed to release at 4:05 as well, so that'll be fun to watch too. What? C3 is an AI company. Can I do a stop order? I mean, you can. You could just do a trailing stop order. That'd probably work. But again, I just trade at your own risk. I don't know. Again, there's AMC. Here's GameStop, which again they're expecting 15-cent loss per share on about 1.14 billion in revenue. Here's C3. All right, so I know we got Tesla AI Day 2023. I believe it's on September 30th. I'll have to look at the Tesla website. Are they going to do an AI day? I see they did one. Yeah, I see Investor Day, but they might not be doing another update after Elon got burned by the whole the whole open AI stuff. You know, he might not want to do these anymore. All right, guys, there's C3 starting to test that 3150s. Okay, and the only article that I can see that's actually written about this, this had to be written by AI. Let me quote a part of the article that says it's on September 30th. Again, scheduled for September 30th, Tesla AI Day 2023 is scheduled for September 30th. That's all one. And excitement is already building. All right, that's a sentence. Again, let me say that sentence again by this article. scheduled for September 30th. Tesla AI Day 2023 is scheduled for September 30th. And excitement is already building up. End quote. AIstack.com. This had to be written by AI. And so I'm not confident in that at all. Well, I'll have to look it up more. But anyway, C3 AI at 3150s here, 3150s. Yeah, David Buster's is today. We also have ChargePoint, UiPath. Again, GameStop, pretty flat, man. GameStop's just lost so much liquidity. You know, here's a long-term chart of GameStop. It's still looking really rough, man. Very rangy. Like, it puts in big moves. But GameStop's basically been on a downward turn. You know, all the way back since the crazy squeeze in 2021, which was here. You know, it's been on a downward run since then. To where now we're here at 1850, and this is post split. It was split a little bit. So, and again, C3 is pretty flat too leading into this. The other one we have today, I think somebody mentioned, was Dave & Buster's. We also have, let me take a look at all this stuff. So we got Dave & Buster's, we got ChargePoint, CHPT, and EV charging company. We got Sportsman's Warehouse, Couchbase, Yext, Sprinkler, UiPath. Small companies. I'm not really super familiar with a lot of these. I know Dave & Buster's, of course. Never heard of Couchbase. Never heard of Yext. Never heard of Sprinkler. In-app. A couple other ones, but yeah. All right, guys. C3 AI. 3150s. Right now, 3150s. We also have GameStop here reporting earnings. They're both expecting roughly the same EPS. I believe C3 is expecting a 2-cent higher loss per share at 17-cent loss per share on 71.2 bill. Or 71.59 billion. GameStop expecting 15-cent loss per share on 1.14 billion in rev. So that's what we're looking at right now. Again, the SPY's still flat. Massively big short on C3. If AI goes up, it could easily tag 36. In my opinion, one of my setups is exactly flat. So AI is one of those that could do whatever. Yeah, I mean, definitely it could do whatever. We don't really know. And we know it's AI related. It already had a pretty big dip a couple days ago. Like, you can see this big dip. Mostly from Nvidia sympathy, I think, is what this is from. Like, I'm pretty sure this is from Nvidia sympathy. Again, SPY up to 446s. 446s. I don't think we have much else going on this week, man. We got GameStop earnings. Tomorrow we have jobless claims. Factory orders. Nothing really, man. Or no, I'm sorry. Tomorrow we have jobless claims, continuing claims. We got FOMC Harker speaking, non-farm productivity, crude oil inventories, which might be relevant because of all the oil stuff going on. We have Japan GDP data coming out. And then Friday we got an IPO of some stuff. All right, guys, we got 9 minutes until the closing bell. Yeah, I've never heard of I've never heard of Sprinkler either. It's SPRNKLR. That's how you spell it. Yeah, never really heard of it. The other AI stocks like Palantir or Nvidia will pump, or I'm not sure. It really depends on what the report shows. Yeah, ChargePoint should be interesting, but yeah, it'll depend on what it shows. It's kind of a bloody day in the market right now for sure. Tapped off by AMC's sketchiness and weirdness. AMC all the way down at 850s. Again, we got GameStop today. Nvidia is also diving down a lot. So if we look at Nvidia here, Nvidia all the way down at 470s right now. So Nvidia is just a struggle for sure here at 470s. So whole day is pretty red. Most stocks are red right now. C3 is holding up though. If you look at it on the right side here, it's at 3160s. So I mean, it's holding. It's doing okay. It's not doing terribly. Yeah, it's September though, so it's historically a pretty red month, regardless. You know, so I think a lot of people expected that. The only thing is like the market does move contrarian a lot of the time. So with that, you know, everybody expecting the market to pull back. Sometimes the market will kind of shock people and do the opposite. It hasn't really shown us that yet. You know, so far in September we are red. Or no, we're still green this month. Or no, we're red. Yeah, so we started the month off. We started the month off at about 449. So the SPY's at about 446. So the SPY's at about $3. Big bullish on AI is wild. It's not even profitable, not to mention software as a service is dying. Yeah, but I mean, again, you cannot like AI, but like I think AI is obviously game changing. I don't know about any individual AI stock, but number one, why do you think software as a service is dying? Number one. Number two, AI is about production, you know, and it's only going to improve over time. So like with that, again, I talked about this morning. The areas in which the areas of business and jobs in which AI is going to replace is going to be production jobs. It's going to be photography. It's going to be writing. Those two industries especially are going to be wildly affected by AI, especially nonfiction writing. I think you always need creative writers and stuff, storytellers, but nonfiction related writing, production, video editing, digital editing. I think when you look at those things objectively and into the future, those things are obviously going to be wildly influenced by AI. AI is going to make it much easier to produce those things. Like if you're a real estate agent, you don't need to go to a headshot photographer to take pictures of you. You don't need to buy a suit. You don't need to go and get some headshot photographer to take a picture of you and pay $400, which again, I'm a real estate agent. I've had to do that. I can spend $30 and have AI produce me a pretty good, you know, headshot for $30. I'll get it faster too. So I think that's just one area. Writing is another area. You know, it's just going to help people produce more stuff. You know, people acting like it's going to take over the world like Skynet that's just sensationalizing it. I think what it's making you do though is produce more stuff. I think creative people are able to produce more things faster. And so I think that change is obvious and very self-evident, you know. All right, guys, we got 5 minutes until the closing bell. All right, guys, AI at 3150s. Again, the closing bell in about 4 minutes. We still got a little bit of time, but remember the actual earnings for C3 are not going to be, let me see when they are. It's at 5 p.m., so we got about an hour still. GameStop earnings. GameStop doesn't have an earnings call today. They still got earnings, but it's not going to be an actual earnings call, which is weird, man. That's the second release in a row GameStop hasn't done an actual earnings call, which is strange. It doesn't look good for GameStop either. We'll see what their earnings show up as. Another thing we're watching is AMC. Again, we'll see if AMC can fight back. AMC's been down a lot. Yeah, but there's a difference between saying AI is a slippery slope in terms of like control or versus saying AI just doesn't work. There's a difference between saying AI has no utility and fearing AI. Those are two completely independent things to each other, right? Like I understand there's risks in AI, right? But I'm not going to sit around and say AI doesn't work or that it has no utility or that it's just a fad. I think that's silly. I think when you look at it objectively, and I think people have a hard time being wrong. Like nobody wants to admit they're wrong. But I think when you look at AI already, it's had such a fundamental influence on technology, business, in a lot of different ways. And I think there's a difference between acknowledging that and saying AI works. It doesn't work, And I think a lot of people stay on to like AI doesn't work. It's a fad. It's a gimmick. And it's like, it's obviously, look at Nvidia, right? Nvidia is not a small company to begin with. We got 2 minutes until the closing bell, guys. So I think you got to look at it objectively. And I think you have to, it's number one, it's fine to fear AI. I understand fearing AI. But on the other hand, saying AI just doesn't work or whatever is just silly. I think that's just ignoring reality. But again, I guess it's subjective. Again, AI at 3150s, almost 3160. Charge point. Yeah, charge point is, it's going to be an interesting day for EV. Charge point is all the way, charge point's looking rough too, though. Like, look at charge point. Charge point is all the way down here at $7 a share. So charge point's looking kind of rough as well. Yeah, I'm not saying C3 is bullish. I mean, I hope it is, but I have no idea what it's going to do. All right, we got 1 minute left until the closing bell, guys. 1 minute. This is AI right here on TOS. AI's at 3150s or so. 3150s. All right, so here's the closing bell. Again, y'all do me a favor, bump that like button up, hit the subscribe button. We appreciate it. Yeah, and I think even if we look at AI here for like specifically here, I think if we look at the term AI over the last year has grown. If we look at Google Trends. All right, so here's the closing bell, guys. There's the closing bell. Ding, ding, ding. The market just closed. Let's watch for big volatility in both GameStop as well as C3. So let's watch for big volatility in both GameStop and C3. So here's GameStop on the left. It's at 1875. C3 is at 3130s. Again, what I was trying to show you guys is this. So like, look at this. So here's AI trends over time. This is the last 12 months. Right, so we spiked in April, but like you can kind of see it'll spike like that. Again, we're looking at C3 at 3140s, 3150s, 3157. GameStop at 1858s. Waiting for these to be released. Again, GameStop specifically is scheduled for release at 405. C3 has still got about 15 minutes or so until they're scheduled to release theirs. But again, we really don't know when anything's going to come out. All right, so yeah, this is GameStop's first report after firing their CEO. Again, we're at 3150s for AI. Again, GameStop consolidating at 1870s. We're watching both of these, and we'll cover these quickly. I don't think we had anything dropping right at 4 p.m. C3 still climbing, though. SPY's starting to consolidate, though, and start to head up, too. Yeah, GameStop sketch, man. It looks rough, dude. It really does. AMC's not looking that better today, though, to be honest. Yeah, we got the ARM IPO this Friday. All right, look at C3 up there to 3180s. I don't think it's the actual earnings. I think this is just an anticipation of it. But we do have C3 up there to 3180s, 3170s. I don't see anything out yet for this one. Still waiting for GameStop here. Fitch upgraded GM and GM financials. All right, again, we're at 3180s for C3. Nothing really released yet, though. Looking at the actual SPY, though, SPY's trying to move back up in after hours. C3 is moving a little bit, though. It's not really too crazy yet, but again, GameStop on the left, C3 on the right, C3 at 3170. Still nothing yet. Anticipation for the earnings report. C3 is climbing. There's GameStop up to 1880s. UiPath. I don't think Path is out with theirs yet. We're getting volatility, but none of these are actually out yet that I'm showing. Yeah, I don't think Path is out yet either. Again, we're right at 32s here, right at 32s. C3 moving up, though. I mean, it's not looking weak in anticipation. The earnings actually aren't out yet for C3, but it's not looking weak right now. We also have David Buster's CHPT earnings as well. Most of these are supposed to drop in about 45 seconds, except for C3, whose C3 is scheduled to release at 4:15. A lot of these are trending well in pre-market before the actual release. That was a candle right there, though. Look at GameStop. All right, so there's 4:05 in 20 seconds. GameStop volatile here. I'm also going to put it in sub-only mode so we can... All right, so there's GameStop, guys. GameStop at 1930s right now. Just went green on the day. All right, so C3 just released their new generative AI suite. They announced the launch of their generative AI suite, including 28 domain-specific generative AI offerings available to address the unique needs of industries, businesses, and processes. So that's, I guess, making C3 go up. GameStop all the way up to 1970s right now. There's 305. This is when GameStop is supposed to be out with their numbers yet, but I don't see it yet. GameStop dumping down to 18s. It looks like GameStop might be out with theirs. All right, GameStop posted a second quarter loss per share of 1 cent, adjusted loss per share of 3 cents, $2.8 million second quarter loss. They came in at a 3 cent loss per share on a 1.16 billion beat estimate. So GameStop came in mixed for their results here. So here's GameStop numbers right here. But again, GameStop really not moving at all from these earnings here, which is strange, man. Again, AI is not out with theirs either yet, but GameStop just not moving. Yeah, GameStop's out. The numbers are right there on the bottom of the screen. They lost 3 cents a share, missed EPS. Or no, wait. Yeah, GameStop beat both. Still down, though. They're at 1880s. C3, we're still waiting. C3 is not scheduled to release theirs until 4:15 market time. So we still got a little bit of time before C3 is actually scheduled to release. Again, I'm going to put this in sub-only mode as well. C3, we're still kind of sitting back waiting. Again, C3 released a new generative AI suite, including 28 domains. Yeah, here, I'm going to put this up on screen. There's C3 up to 3260s here, so still moving up nicely. Sorry for my dogs, they're loud. This up on screen. C3 still moving up. That's a big candle. It looks like they might be out now. We'll see. Again, I don't see AI stocks yet. Again, GameStop is out with their, man. What a low volume release, though. All right, there's C3 pulling back a little bit. And GameStop's not really doing anything. It's slightly green on the day. It looks like C3 might be out with theirs, but they're just not moving much, man. Again, C3 is scheduled to release theirs. Again, you can kind of see GameStop's numbers here, too. GameStop's actually down, which is a surprise because they did better than expected on both metrics. GameStop cash equivalents and marketable securities were at $1.195 billion at the close of quarter. I mean, I can call it C3 or AI. I mean, it doesn't matter what we call it. GameStop's the most surprising one. Again, you can kind of see their cash equivalents and marketable securities are at almost $1.2 billion at the close of the quarter. It's just kind of shocking that they're down as much as they are. Still waiting for AI's numbers to come out. Nothing yet. Do me a favor, guys. Everybody bump that like button if you can. Let's try to get over 100 likes if we haven't already. Again, we're still scheduled to release at 4:15 market time. And so we still got, technically, we got 15 minutes or so until this release is supposed to happen. I don't know if it's the part of the year or not. It's just slow. Looking at our Twitter numbers. Again, GameStop ended up showing 71.7 bull, 28.3% were bearish. So you can see GameStop now moving under the volume weighted average price. Still waiting for C3's numbers. Looking at C3's poll on Twitter, about 60% were bullish, 40% were bearish, give or take. Pulling back down to 32 here. Again, you can kind of see C3 AI on the right side. Yeah, C3's never actually had profits. That's true. But they're still pretty new as a company, especially a public company. UiPath just released. So again, UiPath just released. They're all the way down to 1580s right now for UiPath. So UiPath is out. I'm going to have to look to see what their numbers were. C3 still waiting. Am I showing GameStop's wrong numbers? Like originally I showed second quarter EPS was 3-cent loss, beat the 14-cent estimate, sales of 1.16 bill versus 1.14 billion. I'm showing on TOS and Newsbot something else. Again, do me a favor, bump those like numbers up. CHPT, charge point. But yeah, you can see path move. C3 is supposed to drop in about 3 minutes or so. Yeah, I can show GameStop. GameStop's just not really moving that much, man. I mean, we can put it up, but... All right, there goes C3. This has got to be C3. Yeah, C3 released. It's got to be C3. All right, so yeah, AI revenue was 72.4 million, slightly above estimates at 72.4. They showed a first quarter loss per share of 56-cent loss per share on a loss of 64.4 million. Again, 56-cent loss per share on 64.4 million. First quarter revenue came in 72.4 versus 71.59 expected. So they slightly beat the revenue expectations. They came in negative for EPS. You can see that retracement on C3, but it did dip under 31s for a split second. And so there's the earnings actually finally being released. So yeah, the earnings were finally released. Again, we're at about $30 a share now. GameStop, again, we're just not getting any volatility today in earnings. C3 has got a little bit with mixed results. Again, C3 missed EPS, beat sales. Their first quarter loss per share was much bigger than anticipated, though. They expected 17 cents loss per share. They showed 56-cent loss per share. I'll have to see what the adjusted number was, but that's a pretty big miss relative to EPS. Yeah, so now I'm showing 9-cent beat the 17-cent estimates for C3. So in a lot of different numbers here, but that's okay. All right, so yeah, I'm showing 9-cent loss per share versus 17-cent estimates. Sales of 72.4 beat the 71.59 million estimates. All right, so we're going to put this up on screen. We'll also put GameStop numbers here as well. Again, GameStop numbers are right here also. That's the full number. So, again, pretty choppy, man. Path is actually back up as well. What a weird release, man. I don't know why the market's so flat today. But the market's flat. You know, I guess we're not in the heat of earnings season, which is kind of when everybody's paying attention to it. You know, earnings season's a little slow. We don't really get a kickback in earnings season until like much later on as well. So we'll still get a couple. All right, C3 breaking lows. And under 29s for AI at 29.80s. All right, so we're actually going to stream the whole earnings call as well. Again, GameStop up there in 1940s. Flat. I'm not talking about specifically C3. I'm talking about everything. Not really getting a lot of volatility from earnings. GameStop didn't get a lot of volatility. C3 got a little bit, but this isn't the biggest move. This isn't the biggest move for earnings. There we go. As I say that, GameStop finally starting to get some legs here, up to almost $20 a share. We'll see if it holds up there. Again, C3 at 28.40s. So got a little dip. We're getting some volatility. It's just slower. Sorry, guys. My dogs are barking. We're still going to stream the full earnings call in about 40 minutes or so. All right, yeah, sorry. We got a contractor over here, so the dogs can't go out. So they're stuck inside for now. Yeah, so AI under 29 is at 28.70s. So again, they beat EPS. So yeah, both of them beat EPS, beat sales. We'll see if C3 can get some legs. We'll see what they announced during their actual earnings call as well. Path is actually starting to push up towards the previous closing price. So UiPath is actually starting to move up a little bit as well, but it's still flat relative to the day overall. So it's still sideways. All right, so we're starting to bounce back. We're at 29.20s here, 29.20s for AI. We'll see if we make a comeback. Has Nvidia been affected by this at all? I'm sure Nvidia might be down a little bit. Yeah, so Nvidia actually all the way down at 469.30s. So definitely a little bit of a red pre-market for Nvidia also. Yeah, the dogs freaking hate it. So if they beat estimated sales, why would it make it tank 8%? Because earnings don't mean anything, man. I mean, they mean something, but like, again, and I'm not hating on anybody here, right? But like rookie traders, what happens is that rookie traders think that if they accurately predict the earnings, that they're going to make money, right? Like a lot of rookie traders feel that way. They feel like if they can accurately predict the earnings, then they'll make money. The problem is that earnings don't work that way. You know, again, if they did, everybody would be rich, right? If you could just sit around and wait for a company to have good results and buy that stock, everybody would make money. It would be as simple as waiting, interpreting the earnings report, and then just clicking buy, and boom, you're rich. You know, it's just not that easy. There's a lot of nuance behind this stuff. There's a lot of trends. There's a lot of algorithms that all are affected by this. And so it's just not as simple as waiting for something to have good results and clicking buy, or waiting for something to have bad results and clicking sell. It's just much more nuanced than that. It's why I always tell people, like I always get everybody in here trying to tell me they're taking huge positions ahead of earnings, asking me if they think their earnings plays are going to do well. And I always tell them the same thing. It's risky. It's inherently risky. Like you're basically flipping a coin for thousands of dollars. You know, and again, that's just gambling. Like that's not what you want to do. Nobody knows what the numbers are going to be, and nobody knows how the stock is going to react to those numbers. And so it's really important for traders to understand that. Like gambling on earnings is not the move. I don't care how many people try to look cool on social media, flashing gains from making their big numbers. Everybody that I've ever seen that gambles on earnings plays, that takes positions ahead of earnings, and then brags about it to me on social media somewhere. I've had a lot of friends, a lot of people I knew that are like, yeah, I'm taking this play on earnings, and then they make money and they're flashing it off to everybody. None of them kept their account alive. Like every one of those people lost their account eventually. And so again, you can play earnings, react to them. Don't predict them. Have a stop loss and react to them. Taking big call options or big put options positions. I'm not trying to lecture, but like, be smart, guys. Think about it. Like, there's so much volatility that comes with it. Yeah, GameStop starting to move up. Again, GameStop almost at $20 a share. And so we'll see what happens. But GameStop trying to move up. Yeah, I mean, people could say AI is just a fad. Again, that's silly. Look at NVIDIA and Microsoft. You want to know what big money does, right? You want to know what's a fad and what's not? Watch what big money does. Look at what Microsoft did with AI. Look at what NVIDIA did with AI. There's just so many examples of this. Look at what Google did with AI. That's big money. Watch what they do. All right. They invest money into that. Why do you think they're putting so much money into this? It's because it really is going to change production fundamentally. And again, as like, you got to look at it from a programmer's perspective, right? If you're a programmer producing algorithms and you're writing code, you can get AI to do some of that work for you very easily and produce 5x more content than you normally would. And so that's why you see so many big companies putting money into this. That's why you see Microsoft getting involved. That's why you see Elon Musk and Tesla getting involved. That's why you see Google creating their own version. They're doing this for a reason. They're doing it because they understand the impact of technology that AI is going to have. And so again, I get it. People might fear it. And I think that's where a lot of this comes from. A lot of people that fear AI because they think it's going to turn into Skynet, they're usually the ones that are like, oh, AI is just a fad. It's just a fad, because it's kind of confirmation bias. It's like they want that to be the case because that means they have less to fear. But, sorry, but I don't think that's accurate. I think if you look at AI and the impact it's had already, it's really game changing for technology. And I think that's just going to evolve more and more into the future. Yeah, AI is just a fad for the next 30 years. Yeah, exactly. I can't imagine running my company at minus 8 mil. I mean, yeah, but so if you look at AI, if your company's got a market cap of almost 4 billion, minus 8 million is not the end of the world, bro. You got to look at it in terms of like size of the company. And this is a big company. Again, they're new. Most new companies aren't profitable yet. But they're new. They've only been around since a little bit after 2020, and they're starting to come back a little bit. And so really what you want to look at is just how well their margins trend over time. Like, you just want to look at what their margins are trending like over time, what their EPS is trending, what their revenue is trending. And again, we can look at this latest report and show you what's going on there in that regard, like what's happening there. Again, let's pull it up. But again, what we do know is that their revenue is increasing year to year, right? So here's their revenue growth year to year for C3. All right. So again, this is the true stuff you look at. Look at GameStop, guys. GameStop's starting to pop all the way up to 20 and a half. Let's see if it holds. But yeah, speaking about what I was just saying, here's their revenue. Again, their revenue is increasing over time. What did they show today, revenue-wise? 72.4 million. And so, yeah, they're roughly break even with the last revenue, but their revenue has been increasing over time. If we look at their EPS, which is another big gauge here, and most of these are starting to come back. So tech's starting to run back a little bit here, team. Again, so this is going to be a big dip in the graph of here, right? So again, they showed what today? They showed 9-cent loss per share, right? Yeah, 9-cent loss per share. All right, now when we look at this, that means that this is going to be way down here now. It's going to be right around there instead. Just to put this into perspective, just to put it a little bit larger. That means that this graph is going to be trending in the right way. It's going to instead look like this now. All right, let me draw it. That's what that graph is going to look like now. And so again, if that starts to trend more and more this way over time, that's a company that's becoming more and more profitable. And so, yeah, we'll see what happens, but that's the way you have to look at it. GameStop up to 2060s here. C3 is basically rebound all the way back from where it went to where it was. Back up to 31s now for C3. Again, their earnings call still in about 30 minutes. Never trade earnings. Yeah, I try to tell people, man. Again, I think a lot of people justify gambling in the stock market. So it's like really, like they're just gambling, man. They're just looking for a rush. You know, they're looking for a rush. If they weren't trading stocks, they'd be putting it all on red and roulette or something. You know, they're just wanting that rush, that feel. You know, and you know, instead of gambling conventionally, they do it this way so that they can feel cool. You know, like, oh, you're smart. You're trading stocks. You know, you're a stock market genius. But a lot of people are just justifying gambling, man. Unfortunately, that's what it is. And so just don't, you know, you learn the common things to avoid, which is one of them is just don't take big positions ahead of earnings, short-term positions. Don't take big short-term positions ahead of earnings. It's just risky, you know. I know you can buy a bunch of option contracts and get, if you get it right, you can make a bunch. If you get it wrong, you're going to lose a bunch. And the edge is nothing. There's no edge in predicting earnings results and reactions. There's just no edge. Man, what you guys thinking AI is going to be tomorrow? I'm really not sure. Nobody knows. They're either depends on what they say during their actual earnings call. We're gonna stream the earnings call live like we always do, but it really depends on what they say there. Will you address me? What is so going to be tomorrow, bro? Nobody knows. I don't have a crystal ball, man. I don't know what C3 AI is going to be, where it's going to be at tomorrow. Nobody does. If I told you an answer, I'd be lying to you. I'm not sure. Nobody knows exact pricing. The shorter term, the harder it is to predict. And so it's just a coin flip. It's my guess is as best as yours. What's happening with GameStop? GameStop had better than expected EPS and sales. So better than expected EPS and sales. They're moving up some from it. But yeah. Market will go up and down and up and down. Yeah, that's all we know. Fugazi or Fugazi. GameStop's still moving up. Hey, shout out to GameStop. SPY's still looking red, but GameStop moving up to 2160s. So is GameStop a meme stock still? It continues to beat earnings and has zero debt. Yeah, but I mean, it's still losing money, though. You know, it's been losing money. I mean, despite this gain, and I hope it goes up. But, like, you know, this is the long-term chart. And so it's still losing money. And it's one thing if a company like C3 is losing money when they're still pretty new and fresh, like they're still a pretty new company. It's another thing if you've been around for, you know, if you've been around since 2007 or 2008 and you're losing money now, and you have lost money quarter after quarter after quarter, you know what I mean? Like there's a difference there. And I think the signs are rough for GameStop. Why is Amazon rising after hours? It's not up that much. And so I wouldn't say this is probably just normal price action. I'm not sure why this is up as much as it is. But it's not like Amazon is having some crazy pre-market or crazy after hour session where it's just going up like crazy. It's just not what it's doing. I mean, if you look at Amazon right now, I mean, this is basically nothing. It's basically flat in pre-market. It's not red, which is good, but still down on the day. Amazon had a rough day too, along with all the other big stocks. C3 started to move up though. It's starting to test the previous closing price in the VWAP there. So there's C3 trying to move up to 3140s here, guys. 3140s. All right, so again, AI at 3120s here, 3130s. GameStop started to dip under 21s. Yeah, all good. AMC back to 4. Is it really? No, it's at 9. Definitely not a good day for AMC for sure. It's not really at a point like AMC dipping like this. Like normally I would be the type of person that says, hey, AMC's at a discount. Let me buy that up. I'm really not there. I think there's too much risk in that for AMC right now. I think there's tons of risk here because I think AMC could file for bankruptcy and go out of business. And I think that's they could either file for bankruptcy and go out of business, or they could do a reorganizational bankruptcy and whatever happens there. I'm not sure, but I think there's definitely risks here now. I think again, I don't know. Like again, when you take a step back and you look at these communities, right? And again, I think it's going to be really hard for some of the ape communities to like accept and to like really look at this objectively. But I think when you zoom all the way out here, I think it's very plausible that these crazy movements and these crazy short squeezes and these crazy conspiracies about the big banks and about how these stocks are fighting the big banks, I think these could have been started and ultimately continue to be perpetuated by these companies themselves. I think GameStop prior to that short squeeze was at like $3 or $4 a share. Then all of a sudden a bunch of people decided to just go heavy on it. Again, I think it's possible that it was perpetuated by GameStop themselves, as a way to save themselves. Again, AMC as well. I think AMC, it's possible as well. I'm not saying that's what happened, but again, when you take a step back, it's just like a regular investor. Like you want to buy companies that have a good chance of thriving long term. And I don't necessarily think either one of these companies look good long term. GameStop, again, like when your business comes from physical purchases of video games and the video game physical purchase trend, looks like this over the years, that's a bad sign. Technology is growing to where it's going to replace GameStop. So what are you going to need GameStop for? AMC, same thing. Movie theaters, the pandemic, streaming services, early release movies, all that stuff is generally bad for theaters. And I'm a big movie buff. I love movies. But I think you got to take a step back as much as I think people are so emotional about it because they've spent so much time and energy. And I think it's kind of like flat earthers, like flat earthers. You could show somebody in the flat earth community that the world is round. You could fly out in a spaceship and show them the world's round. I still think they would deny it because I think they value so much being a part of that community and knowing a secret that nobody else knows and having that community and those friendships. I think they value that so much that they ignore reality. And I think sometimes it's the same with stocks. And I think Sorry, my dog Bruce. We have a contractor here. He can't go outside, so we're just kind of hanging out, waiting. We gotta wait for the contractor to leave. We got a dude power washing. Sorry, we got a contractor here, and this dude was supposed to finish yesterday, but he just kind of left all this stuff here and finished today. Either way, he's finishing up now, so the dogs are freaking out. But we got contractors outside, so we can't let them out because, you know, they would eat the contractor. But yeah, point is, you know, I think at a certain point, like, people get emotionally attached to stocks and the communities that revolve around them. And I think that's a bad thing. As much as you like these communities, you know, again, a company that's truly thriving does not need to talk you into holding it. They don't need to make you feel all warm and fuzzy so you hold it, you know, as it depreciates over time. Like, they don't need to make you feel warm and fuzzy. They don't need to make you feel like you know some secret everybody else doesn't, right? Like, they don't need to do any of that stuff. They're just successful companies, and so that makes people want to buy them, you know? And so I've always said it, and I'll say it again. If the company's making you feel all warm and fuzzy on the inside because of the community that revolves around it, it's probably because the stock is depreciating and they don't want you to sell. Sorry, this contractor's here. Honestly, I've got other problems with this contractor. Can you please explain what should we look in the earnings report which makes it bullish? I mean, there's nothing. You got to look at EPS, revenue, guidance projections, and guidance. Like, that's what you want to look at. Those three metrics are the most important one. Again, EPS, revenue, guidance. Guidance is probably the end all be all of like price action. So like, a company has to have good guidance, generally, if you want it to move up. Now it's kind of a mix of all of those things. So it's a mix of EPS, revenue, and guidance. You know, guidance is probably the most influential because guidance is future projections. So with that, you know, what the stock did historically is fine, but looking into what the company thinks that they'll do in the future is important. And there are some rules in which they have to follow, so they can't just fluff and say, hey, I think we're going to make $1 trillion next quarter. Like, there are some rules they have to follow, and so looking at guidance is the most important one. But again, EPS is a gauge on profitability, how profitable the company ultimately is. Revenue is the ceiling, like the profit ceiling for these companies. So that's basically what it is. Hopefully my dogs realize that the guy's here and we see him. Let me just be quiet. GameStop started to dip down. It's at 1950s right now. I don't think GameStop has an earnings call. Yeah, I see Q2 for GameStop. I see the earnings release. GameStop coming all the way back down. A lot of stuff are. A lot of stuff is. But we got a bunch of votes on our AI poll. Again, 61% say they were bullish, 34% said they were bearish. 39% said they were bearish. So interesting. And again, we're pretty flat. I mean, like we reacted to this, but it's not the craziest reaction here. We still got 18 minutes before the actual numbers drop. Yeah, I think people are gullible, man. And I think money makes people even more gullible. You know, and I think confirmation bias is one of the single most detrimental things to people in general for investments. You know, like it's really hard to look at stocks and investments objectively, you know, and everybody has bias to a certain extent, but you know, again, people get stuck in following these different people and like even gurus, man, like they follow these different gurus who are just kind of selling them courses or telling them the market's going to crash every other week, you know. And instead of like taking a step back and saying, hey, like this person's selling me crap, like the content in this course is not good. You know, they spend so much money on it, like they spend so much money on these courses that, you know, with that confirmation bias, they tell themselves, oh, it's great, this is great. You know, they don't say, hey, this is kind of publicly available, I didn't need to pay for this. They just say, oh, this is the greatest course I've ever taken, or this is the greatest mentor I've ever had, you know. And they want so bad for it to be real, but like it's hard to look at objectively. GameStop at 1940s here, so it's right around the previous close, right around the VWAP, which is a big level. It's an important level. So here's that previous close VWAP level right here. Again, you can see C3 dipping down some here and starting to drop. Man, my dog needs to be quiet. I mean, again, people saying Burry was right. Like, y'all, I mean, look, we can look at the market, all right? Where's the crash? Like, please tell me where the crash is. You know? Seriously. I like, look. That's where we're at. You know, I don't see anything that looks like this on the chart. You know? Like, really, I see an upward trending market if you zoom out and look long term. But maybe he was. I don't know. But yeah, I don't see it. Now, Bitcoin didn't create the hyperinflation in CPI. That wasn't Bitcoin. That was mostly from... A lot of it was from oil increasing because of the conflict overseas. A lot of it was because of the housing bubble and what that meant for everything, as well as the effect of the pandemic on work and remote work and commercial real estate. Like there's a lot of, it's nuanced, but there's a lot of reasons for CPI and inflation data being higher than expected. All right, guys, we got 14 minutes before the C3 AI. Do me a favor, bump that like button if you haven't already, guys. We appreciate it. Definitely a slower earnings call. I probably should have covered GameStop, but it's all good, you know. Yeah, I think a lot of the meme GameStop traders are starting, like I'm seeing what Pawn wrote, like something Pawn wrote. I think a lot of the GameStop traders, again, I've been telling people this for years, man. People just get so emotional, dude. Like, when you mix a bunch of traders that don't really know anything with corporations that are struggling with greedy short sellers, you get a recipe of just craziness. That's what the last few years. I'm excited for that movie to come out too. That'll be a fun movie to watch. Yeah, UI path. I see path. AMC's still down under $9 a share. Yeah, UiPath is actually doing well. Look at Path. It's doing something at least. We're at 1730s. Yeah, I think it's a slower part of the year. Wall Street's a good movie. That Dumb Money movie was copying other stories that they don't have copyrights to. Yeah, I mean, it doesn't matter, man. They gotta prove it. All right, guys. Hey, we got 12 minutes before C3 AI numbers. Yeah, I'm sitting back, so we are going to stream the full earnings call live. Also, if you haven't already, check out TopStep. TopStep, if you want to day trade some of this crazy volatility, TopStep is the most legit funded program in the world. They put out millions. They pay out millions in actual withdrawals every year. They fund thousands of traders a year. What they do is they give traders a demo account and futures. And in futures, you can trade the S&P, the NASDAQ, currencies, gold, silver. And there's no PDT restrictions. And they give you a demo. And if you can hit the targets while following the rules, essentially pass their test, they fund you between 50 to 150K with a 90% split, and you get to keep your first 10K in profit. Most traders are going to lose this because most day traders lose money, but it's a lot cheaper to lose in this than put up the money yourself. And it's a great learning tool for new traders specifically. And so it's really useful to learn. It's $49 a month. And again, just really useful. A great way to learn trading, learn day trading, especially if you don't have that much money. So here's the link. You can check it out here. Yeah, September is usually a pretty slow month. I'm looking at, like, even on my channel. All right, guys, Path at 1720s. Let me switch out my headphones here. All right, there we go. Let me switch these out. Barn market would create the crash? Maybe. Let me switch this. All right, we're at 1720s right now. 1720s for Path. C3 is pretty flat. Let me get the actual earnings call set up. We got 9 minutes. Yeah, sorry for my dogs, man. They're kind of jerks. There we go. They're not jerks. They're great. They're just protective. Again, we're at 1730s for path, 1730s. October's usually busy. Is Jerome Powell doing a Bank of France speech again this year? I don't think Jerome's doing a Fed listen speech either. I don't know if it's smarter to buy a call or not. I really don't know. I really have no idea what we're going to do for that. So let's see. Yeah, I'm looking at other stuff too. I don't think we got some speakers this week, but nothing really. Vice Chair Barr is speaking on Friday. We also have that big IPO on Friday. What's that big IPO? I'll have to go back and check. I still don't know if Tesla's doing their AI day today as well. ARM. Yeah, ARM is Friday. We'll cover that. What do you think about TTOO and the upcoming GTA 6 release next year? Man, they've been rumoring GTA 6 release for a long time. So I don't know. All right, we're gonna look at October to see what speeches they have in October. I don't think there's any speeches in October scheduled yet. Let's see, November, December. Maybe they're just not out yet. Yeah, so we'll watch the ARM IPO for sure. But yeah, we got 4 minutes here, guys. 4 minutes. Again, kind of a slow day. It's all good. We got some busy stuff next week. Next week, we got CPI, PPI, and a bunch of other stuff too. So hey, y'all hit that subscribe button if you haven't already. We're going to get ready to stream the actual earnings call. Let me get it up and set up. Sorry for my dogs barking, man. We'll be sure to mute it when the earnings call actually starts. All right, there it is. They scheduled it right, though. They said C3 AI first quarter 2024 earnings call. There it is. The webcast pulled up. There we go. All right, so we're waiting here on hold for their earnings call. We got 3 minutes here, 3 minutes. Make sure you hit the like button, hit the play button. Also subscribe if you haven't yet. GameStop actually doing all right, but back up to over 20. Still moving up. We'll see what AI does. What do you think of Disney? Disney's down a lot today, isn't it? Yeah. Or it's not down a lot today. It was down a lot yesterday or the day before. Hey, Disney's all right. Again, I'm just kind of holding it long term. It's like my take on Disney. So like I can kind of add a little bit to it as it dips. I'm not gonna hold it like forever. If it like ever crashes, I'm not gonna hold that for sure. But yeah. I'm trying to look at what else we got. I don't think we have any other big earnings reports. This is like the last big earnings report for the entire earnings season. I don't think there's any other big ones. You can always tell when earnings season starts. I think might have AMD. When's AMD earnings? October 30th. Yeah, so you can always tell when earnings season starts because Tesla is the first one, right? Tesla and Netflix they start mid-October, so we still got like a month before that earnings season starts. Aside from that, AMC released already, I think, right? Yeah, so AMC's already out. Google. Yeah, so we still got until late next month. All right, guys, we got less than a minute before the actual earnings call starts. What would happen to Disney stock if Apple buys it out? They would either merge or they would pay out the shareholders the price of the buyout, like the buyout price. All right, so we're going to take GameStop off and just put in AI here so we can watch just AI for the earnings call. Let's see what they did, but there's the AI stock right there. All right, so y'all can hear the music, right? Just to make sure. I turned the music off just now, but I'm going to mute the sound and then listen to it on the other end. All right, so yeah, I'm listening to it on the back end, waiting for it to start here. All right, guys. So yeah, sitting here waiting for him to start. They got some bad hold music here, but we're waiting. All right, still above 30. We can watch the whole $1.30 right there too. I think that makes sense. Still waiting. Earnings call should be starting pretty soon. All right, still got some bad hold music here. We're still here. We're waiting for him to start, guys. So bear with me. I think they're about to start. Let me know if you can hear it. Nope, faked me out. Can y'all hear?
Good day, and thank you for standing by. Welcome to the C3 AI's first quarter fiscal year 2024 conference call. At this time, all participants are in a listen-only mode. After the speaker's presentation, there will be a question and answer session. To ask a question during the session, you'll need to press star 11 on your telephone. Please be advised that today's conference is being recorded. I would now like to hand the conference over to your speaker today, Amit Berry. Please go ahead.
Good afternoon, and welcome to C3AI's earnings call for the first quarter of fiscal year 2024, which ended on July 31st, 2023. My name is Amit Berry, and I lead investor relations at C3AI. With me on the call today is Tom Siebel, Chairman and Chief Executive Officer, and Juho Parkkinen, Chief Financial Officer. After the market closed today, we issued a press release with details regarding our first quarter results, as well as a supplemental to our results, both of which can be accessed through the investor relations section of our website at ir.c3.ai. This call is being webcast, and a replay will be available on our IR website following the conclusion of this call. During today's call, we will make statements related to our business that may be considered forward-looking under federal securities laws. These statements reflect our views only as of today and should not be considered representative of our views as of any subsequent date. We disclaim any obligation to update any forward-looking statements or outlook. These statements are subject to a variety of risks and uncertainties that could cause actual results to differ materially from expectations. For a further discussion on the material risks and other important factors that could affect our actual results, please refer to our filings with the SEC. All figures will be discussed on a non-GAAP basis unless otherwise noted. Also, during the course of today's call, we will refer to certain non-GAAP financial measures. A reconciliation of GAAP to non-GAAP measures is included in our press release. Finally, at times in our prepared remarks, in response to your questions, we may discuss metrics that are incremental to our usual presentation to give greater insight into the dynamics of our business or our quarterly results. Please be advised that we may or may not continue to provide this additional detail in the future. And with that, let me turn the call over to Tom.
Thank you, Amit. Good afternoon, everyone, and thank you for joining our call today. We're off to a strong start for fiscal year 24. Our revenue came in at the high end of our guidance, exceeded analyst consensus, and we're seeing significant traction across our business. This is the 11th consecutive quarter as a public company in which we have met or exceeded our revenue guidance. Following the release of ChatGPT in November of 2022, we are seeing a dramatic increase in demand for enterprise AI adoption. In Q1, we experienced strong traction with our enterprise AI applications and especially strong traction with C3 Generative AI. Let's take a look at our revenue highlights for the first quarter. Total revenue for the quarter was $72.4 million, coming at the high end of guidance. That was $70 to $72.5 million and exceeding the analyst consensus. Subscription revenue for the quarter was $61.4 million, constituting 85% of total revenue. Gross profit for the quarter was $40.5 million, representing a 56% gross margin. Non-GAAP gross profit for the quarter was $49.6 million, representing a 69% non-GAAP gross margin. GAAP RPO was $334.6 million. Current RPO was $170.6 million. GAAP net loss per share was 56 cents. Non-GAAP net loss per share was 9 cents. Both exceeded analyst consensus expectations substantially. We finished the quarter with $809.6 million in cash equivalents, and investments, exceeding the average analyst consensus of $774.3 million. Net cash provided by operating activities was $3.9 million, and free cash flow was negative $8.9 million, significantly exceeding analyst consensus that was negative $38.7 million. The market interest in applying enterprise AI to business processes appears to be expanding exponentially, fueled by the interest in ChatGPT and other consumer generative AI tools initially released in late last year. CEOs, business leaders, military leaders, and investors are all focused on how they can take advantage of these powerful new tools to improve operational processes. In Q1, we entered into new and expanded agreements with Saudi Arabia's Smart City NEOM, Nucor, a steel company, Roche, sugar producer Pantaleon in Central America, Ball Corporation, Cargill, Con Ed, Shell, Tyson's Foods, and the U.S. Department of Defense. Our partner ecosystem continues to expand. In Q1, we closed 60% of our agreements with and through our partner network, including Google Cloud, AWS, Microsoft, and Booz Allen Hamilton. Our qualified partner opportunity has increased by over 100% in the past year, and our qualified pipeline with our cloud providers grew by 61% just from Q4 to Q1, Q4 23 to Q4 21. C3.ai's federal business is showing significant strength, with federal bookings up 39% compared with the year-ago quarter. The company continues to expand its work with the U.S. Department of Defense, with new and expanded projects with the Chief Digital and AI Office, CDAO, the U.S. Marine Corps, the U.S. Air Force, the Missile Defense Agency, and the Defense Counterintelligence Security Agency. C3.ai commercial customers, including Shell, Georgia Pacific, Koch Industries, Bank of America, and others, and the U.S. Department of Defense continue to expand their C3 application footprints, increasingly now including C3 generative AI, realizing outsized economic benefit from digital transformations using C3 enterprise AI. Let's talk about a few of these. First, the Department of Defense. Our business relationships with the Department of Defense are extensive and rapidly expanding. The DoD uses the C3 AI platform and C3 AI applications across many services, components, and combatant commands to realize significant improvement in readiness and decision advantage. One example, beginning in 2017, we started work for the U.S. Air Force to improve the readiness and apply predictive maintenance for the E-3 Sentry, an aircraft that you probably know of as the AWACS. By fusing the handwritten maintenance notes with the flight logs and historical inventory, and pilot logs, C3 AI readiness improved the Air Force's legacy maintenance procedures substantially. Following this initial project, the United States Air Force Rapid Sustainment Office selected C3 AI for additional readiness projects, called Conditions-Based Maintenance Plus, CBM Plus, to apply similar analytics-based predictive maintenance approaches to the B-1 strategic bomber and other aircraft weapon systems. This configuration of C3 AI readiness for the United States Air Force, called the Predictive Analytics and Decision Assistant, or PANDA, went live into production and has now scaled out to over 16 Air Force aircraft weapon systems. This system, PANDA, was subsequently selected as the system of record for all United States Air Force predictive maintenance applications. This is the only system of record for an AI application in Department of Defense that we are aware of. The goal of C3 AI Panda is to realize up to a 25% increase in overall aircraft mission capability. And when rolled out to all aircraft in the United States Air Force, this is budgeted to realize a $3 billion cost savings in maintenance and readiness. Talk for a minute about the CDAO, the Department of Defense Chief Digital and AI Office. This is the organization that is chartered with selecting the AI platform of record for all DoD. We began working with them less than a year ago, initially to bring the C3 AI platform into production across a number of unclassified, secret, and top secret enclaves as part of CDAO's Advanta ecosystem, a centralized data repository for the entire Department of Defense. Our first project showed how nodal analysis and contested logistics can radically improve when AI systems are applied to U.S. Transportation Command, or TRANSCOM, data. This application took a simulation-based approach to provide options in response to global logistics disruptions. We're able to accelerate the time it takes to conduct this kind of nodal analysis from days to minutes. C3 AI has now been engaged, less than a year later, in a dozen projects through CDAO, including contested logistics, strategic force readiness, supply chain visibility, commanders' dashboards, and combined joint all-domain command and control. Let's take a look at Shell. Shell has been an important customer since 2018. The C3A applications are continuing to expand across the entire Shell asset base, including upstream, downstream, integrated gas, renewables, and retail, to address asset integrity, optimization, ESG, and predictive maintenance. Today, Shell's C3AI predictive maintenance program monitors almost 20,000 pieces of equipment. And because C3AI can identify failure in advance with very high levels of accuracy, this can both increase production and prevent potential disasters, such as offshore oil rig failures, the cost of which may be incalculable. The economic benefit for Shell is enormous, and they have given presentations at Bank of America and other conferences where they estimate it to be in excess of $2 billion per year. In the past 3 months, Shell and C3AI have further expanded deployments, applying AI-based estimation techniques in subsurface reservoir management, deployed a new C3AI-based Shell oil condition monitoring application for its customers to reduce unplanned downtime and optimize maintenance of heavy-duty assets, and expanded Shell's use of the C3AI ESG solution. Let's switch to Koch Industries. We continue to expand our partnership with Koch, particularly at Georgia Pacific and Flint Hills Resources. We generate almost 4 million monthly predictions across 300 plus assets using our reliability and C3AI supply chain applications. Georgia Pacific is realizing up to 5% improvements in overall equipment effectiveness. Koch also initiated 2 generative AI projects to help process data, documents, and files. Georgia Pacific is improving efficiency in triaging and resolving equipment and production and maintenance issues to automate processing for paper manufacturing. Flint Hills Resources is using C3 generative AI to increase efficiency and improve information access in commodity trading operations. Now, at Bank of America, our C3 applications are deployed to deliver customer insights, optimize business workflows, and provide recommendations to its liquidity product specialists and treasury sales officers. The liquidity team is responsible for managing the bank's cash flow. Every day, over 500 liquidity and sales users log in to the C3 AI applications. The bank is applying AI-based techniques to assess client responsiveness, and sensitivity in a fluctuating interest rate environment. 3 applications are in production today. Bank of America and others are in development. All are expected to generate significant annual benefits, especially in a higher interest rate environment where balance retention, optimal pricing of interest rates, and efficiency of sales and operations become important drivers of profitability and expense reduction. Let's talk for a minute about C3 generative AI, because ladies and gentlemen, this is big. Now, by combining the power of the tried, tested, and proven C3 AI platform that we've built in the course of the last 14 years with large language models that you've been reading about every day, C3 generative AI enables immediate interaction with the relevant and frequently massive corpora of data, documents, and signals associated with enterprise domains. For example, machines, factories, systems, supply chains, natural phenomena, biological systems, and operating divisions. We use a natural language interface to rapidly locate, retrieve, and present relevant data across an entire enterprise's information systems, allowing users to use the full power of AI to optimize productivity, monitor systems, forecast demand, and in general, understand what is happening, what will happen, how to plan, and how to maximize efficiency. The production adoption and customer success since our initial March 2023 C3 generative AI release has been immediate. In the last quarter, C3 AI closed 8 new agreements for C3 generative AI, addressing use cases across multiple industries, including agriculture, consumer packaged goods, defense, intelligence, manufacturing, state and local government, oil and gas, and utilities. To date, we have closed 12 generative AI agreements and have a pipeline of more than 140 qualified C3 generative AI enterprise opportunities. Over 140, okay, now in less than 6 months. So putting this in perspective, our qualified pipeline of generative AI sales opportunities exceeds that of any other product in our product line that we've reduced, of all the products we've released in the last 14 years. This is big. To meet market demand, C3 AI today announced the immediate availability of the new C3 generative AI suite, including 28 new domain-specific generative AI solutions for industries, business processes, and enterprise systems. C3 generative AI provides fine-tuned, tailored, domain-specific generative AI solutions that mitigate the crippling problems that prevent the widespread industry adoption of LLMs. The market response to our generative AI offerings is simply staggering. We believe that the advent of generative AI may more than double the immediately addressable market opportunity available to C3 AI. And now, with our suite of generative AI products out the door, you can expect that we will be investing in the coming quarters to promote, market, and support these initiatives. The 28 applications that we released today and are available today are in 3 categories. C3 generative AI for industries. This includes generative AI for aerospace, for defense, for financial services. C3 generative AI for healthcare, intelligence, manufacturing. C3 generative AI for oil and gas, for telecommunications, and for utilities. Our family of products to address the requirements of business processes include C3 generative AI for customer service, C3 generative AI for energy management, C3 generative AI for ESG, C3 generative AI for finance, for human resources, for process optimization, for reliability, and C3 generative AI for supply chain. Finally, we're releasing a family, and importantly, of C3 generative AI for enterprise systems. Okay, ladies and gentlemen, this is not slideware that's being offered by software vendors. This is production software available to order today, available to ship today, and available to install tomorrow, and it'll be live in 12 weeks. These products include C3 generative AI for Databricks, C3 generative AI for Microsoft Dynamics 365, C3 generative AI for Oracle ERP, C3 generative AI for Oracle NetSuite, C3 generative AI for Palantir, for Salesforce, for SAP, for ServiceNow, for Snowflake, and C3 generative AI for Workday. LLM support is immediately available in these products for Falcon 40B, Llama 2, Plan T5, Azure GPT 3.5, AWS Bedrock Claude 2, Google Palm 2, OpenAI GPT 3.5, and MPT-7B. Additional support will be announced for leading LLMs as the market develops. By combining the power of LLMs and generative AI with the tried, tested, and proven C3 AI platform, we believe C3 generative AI solves the troubling problems endemic to all other generative AI solutions currently being proposed in the marketplace. Firstly, the answers from C3 generative AI are deterministic, not random. That means every time you ask the same question, you get the same answer. You don't get a different answer. Okay. All answers are immediately traceable with one click to ground truth. So honestly, the LLMs that you're playing with on ChatGPT, okay, and Google Bard or whatever they don't tell you where the answers come from because they don't know where the answer's coming from. With C3 AI, we can tell you, we give you the link where immediately you can go to ground truth, no matter what the question is. How am I doing against my diversity goals in North America? Okay, which of my product lines are the least profitable? What am I doing against how are my readiness levels of F-35 squadrons in Central Europe? How am I doing? Where are the gaps in my satellite coverage in Indo-PACOM? Give you the answer, it'll tell you then exactly where the answer came from. With C3 AI, the LLM is, by combining the LLM and utilizing all the investment of the platform, the LLMs are firewalled from the data, minimizing the risk of LLM-caused data exfiltration. See Samsung for details. You've all read about it. And closing the many LLM-caused cyber attack vectors that are now becoming evident. There's a lot of research. If you go look at what's going on, the research that Zico Coulter is doing at Carnegie Mellon, you'll see that they're finding really troubling cybersecurity problems associated with these LLMs that do not manifest themselves in the C3 solution. The C3 AI platform, the C3 AI generative AI solution, assures the enforcement of all enterprise access and cybersecurity controls, in addition providing N-factor authentication and data encryption both in motion and at rest. LLM reasoning is limited to enterprise-owned and enterprise-licensed data, mitigating the potentially unbounded risk that you're now starting to read about, okay, in the literature, associated with IP liability provided from most LLM, virtually unlimited IP liability associated with other LLM solutions. Because C3 AI generative AI is LLM agnostic, not specifically LLM dependent. Okay, we allow LLMs at will, taking advantage of the ongoing massive innovation that we're going to see in LLMs coming in the coming years, and you can just switch one in and switch one out, and all the applications keep running. Finally, the way that C3 AM is structured, C3 generative AI is structured, the fact that we have firewalled the LLM from the data itself, and we go long on this some of their time, we've basically almost eliminated any risk of hallucination. So it does not hallucinate. If it doesn't know the answer, it comes back and says, I don't know the answer, I can't tell you the answer, or the answer, I don't have access to the answer. It's not going to make up some line of creative prose that you've all seen from the LLMs that you've played with on the internet. All C3 generative AI applications can be fully deployed within 12 weeks for $250,000, and they're available today. Okay, right now, actually, on the AWS Marketplace, the Google Cloud Marketplace, and the Azure Marketplace. The licensing model is straightforward. C3 AI supports the customer to bring its generative AI application into production. We do it in 12 weeks. After that, the customer continues to pay per vCPU or per GCPU hour with volume discounts. The generative AI market appears huge. Bloomberg Intelligence predicts this market will reach $1.3 trillion by 2032. Much of this will accrue to chip manufacturers, cloud service providers, and professional service providers. The balance will accrue to generative AI applications. If we double click on this generative AI applications box, expected by Bloomberg to reach $280 billion in the same time frame, we believe the bulk of this will accrue to providers of software that enable businesses to apply LLMs to improve business processes and associated decision making. Now, countless startups today are proposing companies based on generative AI for one industry niche or another. Okay, whether it be doctors' offices or insurance or automotive or pharmaceutical companies or what have you. They're taking their pitches around to venture capitalists all up and down Silicon Valley, and many are getting significant funding, in some cases with private market valuations in billions of dollars. And their big idea, in each case, a handful of entrepreneurs propose to apply LLMs to develop market-specific, business process-specific, and application-specific LLM solutions. Well, C3AI offers these solutions today, and we offer them from a well-capitalized company with almost 1,000 seasoned professionals, partnered with a powerful market partner ecosystem and a global footprint. The market opportunity appears enormous. We have demonstrated in recent quarters that we have solid management and expense controls in place. In Q4 of last year, our cash flow from operations was a positive $27 million. In Q1 of 24, cash flow from operations was $3.9 million. Non-GAAP operating loss substantially beat market expectations in both Q4 of 23 and Q1 of 24. We finished Q1 of 24 with $809.6 million in cash and investments, a decrease of $2.8 million from the prior quarter. Now, after careful consideration with our leadership and our marketing partners, we have made the decision to invest in generative AI, to invest in lead generation, to invest in branding, to invest in marketing awareness, and to invest in customer success related to our generative AI solutions. The market opportunity is immediate, and we intend to seize it. So while we still expect to be cash positive in Q4 of this year and in fiscal year 25, we will be investing in our generative AI solutions, and at this time, do not expect to be non-GAAP profitable in Q4 of 24. You can expect, though we want to see what actually happens in the market in the next couple of quarters and how this plays out, but it looks like right now you can expect us, and we'll update you on this as we know more, but you can assume this happens someplace in the Q2 to Q4 timeframe of fiscal year 25. We have a tight rein on financial controls. We're operating a disciplined business, and we're making this decision to invest in generative AI because we are confident that it is in the best interest of our shareholders. C3AI was well ahead of its time, predicting the scale of the opportunity in enterprise AI applications. When we began, the market was nascent, and as the market has developed and expanded, we've expanded our branding and our marketing offerings to meet market expectations. While we believed for over a decade that this market would be quite large, even we could not have anticipated the size and growth rate of the AI market that we now address. C3AI has spent the last 14 years preparing for this opportunity, and now the market is coming to us. Our technology foundation is tried, tested, and proven. We have a strong portfolio of enterprise AI applications in place. We have a pricing and distribution model that meets the needs of the market. We have a quality brand, a strong partner ecosystem, and a long list of satisfied customers. We're armed with a battalion of professional services employees, professional employees deployed around the world. Our partner ecosystem with Google Cloud, AWS, Azure, Booz Allen, Baker Hughes, and others is well developed and expanding. The company is well capitalized with a senior leadership team. And now I'll turn it over to my colleague, Juho Parkkinen, our Chief Financial Officer, to talk about more specific financial details associated with our performance last quarter. Juho.
Thank you, Tom. I will now provide a recap of our financial results, some color around the expected drivers of our financial results for the remainder of the year, and walk you through our second quarter and full year fiscal 24 guidance. Finally, I will conclude with some additional information related to the consumption-based revenue model we introduced a year ago. All figures will be discussed on a non-GAAP basis unless otherwise noted. First quarter revenue increased 10.8% year over year to $72.4 million. Subscription revenue was up 7.6% and represented 85% of total revenues. As we discussed last quarter, we expected professional services to be within our historical range of 10 to 20%, with our actual professional services coming in at 15% of the mix. Gross profit for the first quarter was $49.6 million, and gross margin was 68.6%. I would like to remind everyone on the call that we expect short-term pressure on our gross margin due to a higher mix of pilots, which carry a higher cost of revenue during the pilot phase of our customer lifecycle. We are pleased with our progress in managing expenses and our success in getting the entire employee base bought into a mission of managing our company with expense discipline. Our success in expense management is reflected in our first quarter operating loss of $20.7 million, which is better than our guidance of a loss of $25 to $30 million. Operating loss margin was 28.6%. As Tom mentioned, the generative AI opportunity is so massive that we believe it is in the best interest of our company and the shareholders to leverage our first mover advantage to seize the market opportunity by making incremental investments in sales, marketing, and customer success. As a result, we are revising our 2024 expense guidance to reflect these investments. I will provide details when I discuss guidance. Turning to RPO and bookings, we reported GAAP RPO of $334.6 million, which is down 27% from last year. This was expected as we transition to consumption-based agreements. Current GAAP RPO is $170.6 million, which is down 1.7% from last year. We continue to see positive trends diversifying our pilot bookings, with Q1 pilots representing 8 industry sectors. Turning to cash flow, operating cash flow was $3.9 million in the quarter, and free cash flow was a negative $8.9 million, reflecting expenses related to the build-out of our new corporate headquarters. We closed the quarter with a strong balance sheet with $809.6 million of cash, cash equivalents, and investments. Total cash and investments balance was decreased by only $2.8 million from last quarter. We continue to be very well capitalized. Our accounts receivables are in good shape at $122.6 million at the end of Q1, compared to $134.6 million last quarter. Total allowance for bad debt remains low at $359,000, and we have no concerns regarding collections. As it relates to our consumption business model, I would like to provide 2 key updates. First, we previously told you that we are assuming a 70% conversion rate of pilot phase engagement to production phase. At quarter end, we had signed a total of 73 pilots. 70 of these are active, meaning that they were either converted in the original 6-month term, extended for 1 to 2 months, or are currently negotiated for a production license. Second, regarding consumption data, our actual vCPU consumption from the last 3 quarters is slightly higher than our original estimates. Finally, our customer engagement increased to 334 from 287 in Q4 23. Now turning to guidance. We're guiding Q2 revenue to a range of $72 million to $76.5 million. We expect our non-GAAP loss from operations to range from negative $27 million to negative $40 million. As mentioned before, the generative AI opportunity is so massive that we have decided to invest for success. As a result, we expect to cross the non-GAAP profitability in the course of FY25. We will provide more updates on this in future calls. We expect to be cash flow positive for Q4 24 and the full fiscal year FY25. For full year FY24, we are maintaining our previous guidance for revenue in the range of $295 to $320 million, and increasing the non-GAAP loss from operations to a range between negative $70 million and negative $100 million. I'd now like to turn the call over to the operator to begin the Q&A session.
Thank you. As a reminder, to ask a question, you will need to press star 11 on your telephone. Please stand by while we compile the Q&A roster. Our first question comes from Patrick Walravens with JMP Securities. You may proceed.
Oh, great. Thank you very much. So it's great to hear about the demand levels and all the activity. Tom, can you talk a little bit about how the linearity in the quarter, how that was, and how things closed out? At your investor event, you told us that you had closed 16 agreements you ended up with 32. But if you look back a quarter, you had 10 at the middle and you ended up with 43. So it makes it seem like maybe the second half wasn't quite as good as you would have hoped, but I don't know. Maybe I'm interpreting that wrong too.
Or maybe the first half was great.
Right. Okay.
Let's look at the half glass full model. I would say that if this might have been our best quarter ever in terms of linearity. I'm not sure. Okay, in terms of predictability. So without getting too specific, I would say, the business volume in the course of the quarter was quite consistent.
Okay. And then if we multiply the average TCV times the number of deals, right, then we get a total TCV number, which, I mean, you guys are the only ones who disclose it. So thank you for that transparency. And if you look at that, that was around 26 million this quarter, and then last quarter again was, 52, almost twice as much. So I just want to make sure we understand what's going on here. Is the TCV not a good indication of how well you're actually doing in a quarter?
Well, we used to compensate people on TCV, and that's back when we used to do 10, 20, 30, 40, $50 million deals, Pat. And now we're doing, $250,000 projects in generative AI and $500,000 projects in, for the balance of our enterprise products. The generative AI products last 12 weeks. The other projects generally last up to 6 months, generally 6 months. So it's a consequence. I mean, it's as sure as, it follows directly that, TCV goes down, RPO goes down. And by the way, gross margins go down in the short run. Okay, because gross margins, when we're doing these generative AI pilots for $250,000, wherever it may be, there is no way we are not going to succeed at any cost. Let's say on the first 50 of these guys, and if we have to overinvest to make that pilot successful, we're going to do it. And so I'm not certain that RPO is meaningful going forward. I'm not certain that in TCV, I've been trying to drive that down, as you're well aware, for 15, 20 quarters. 20 quarters ago, our TCV, I think, was about $15 million. Average contract value was about $15 million. And now average contract value, I think, is less than $1 million, right?
800.
Yeah. So this is a good thing.
Okay, great. And then lastly, Juho, probably for you, you have a footnote on the balance sheet where there's a related party, presumably Baker Hughes, that still has the $75 million. You saw the $75 million in accounts receivable from them. That's the same as last quarter. So are you guys okay with that?
It's a lot bigger than 75.
No, total. Yes, we're okay. I'm not entirely sure how to interpret your question, and we have no collection concerns from any of our customers. Our bad debt reserve is only at $359,000, and all of our customers are paying on time and in full, so no concerns there.
Okay, thank you.
Thank you. One moment for questions. Our next question comes from Mike Cikos with Needham. You may proceed.
Hey, appreciate the new pronunciation on the last name. Thanks for taking the questions here, guys. A couple of questions. First on the guidance, and I appreciate this pivot. You guys are trying to take advantage of this opportunity where it really feels like the Gen AI has come online big, right? I think my question is more around the guidance, if you will. And where I'm going with this is, given the increase that we're talking to in the go-to-market investments, which is obviously acting as a drag on your operating losses, no question about it. But why aren't we seeing some sort of benefit when looking at the fiscal 24 revenues? Why maintain that guidance as we sit here today?
Mike, hi, Mike.
Hey.
I think we've been doing the best we could do since we've been a public company to be credible in setting expectations. and we have met or exceeded expectations in every quarter that we've been a public company. Okay, now we are in uncharted territory still with the consumption pricing model, and we're definitely in uncharted territory with generative AI. Okay, now let's take this. I were to take the sum of all the spreadsheets of all my product groups and the business plans, and you can be sure that they come up to a larger number than we've talked about in guidance. Okay, but our position is we feel with the guidance, comfortable with the guidance that's out there today. Okay, and at the same time, we feel comfortable that after a couple of quarters of acceleration, we're going to be able to look you straight in the eye and say, guys, we're planning on significantly accelerated growth. But I don't want to do it prematurely. I don't want to lose credibility. And I think this is the responsible thing to do.
All right. Thank you for hashing that out. I appreciate that. And I guess another one, totally understand the commentary on RPO and even CRPO declining. I guess it's more for you, Ho, here, but with the transition to the consumption model, should we be seeing CRPO remain more resilient as these consumption pilots start to convert, or are consumption pilots, even when they move to production, not necessarily going to be showing up in CRPO? Can you provide any more color on that, please?
Yeah, absolutely. So effectively, the CRPO is flat, right? And the way the consumption-based business model works is that we start with a pilot phase. That pilot amount would be RPO in the given quarter that we signed that deal. The consumption phase, unless the customer were to sign up for volume discounts, is never going to be in RPO because it's going to be after consumed invoicing. So you only see ever that in revenue.
So if it were 100% consumption model, RPO would be zero.
That is exactly right.
Okay. And the expectation is that most of these customers would not be signing up for those larger volume commitments. So that is going to be an expected drag on the RPO and CRPO then.
Yeah. Yes.
Okay. All right. Thank you for that. Thank you.
And that's why it makes it easier to buy, rather than saying 10, 20, 30, 40, 50. I think one deal we did was $500 million, if I'm not mistaken. Okay. Pretty much, well, 300 million plus a couple other things. Okay. We're saying, hey, it's $500,000. If you like it, keep it. Okay. And so after they pay their $500,000, if it goes that way, there's no RPO.
That's right.
Got it. And maybe just one more if I could, and apologies to be taking all the time here, but I did just want to circle up. I know that you guys are talking about the C3 generative AI pilots being $250,000, 12 weeks, and the remaining product lines, I believe, and correct me if I'm wrong, but you have typically about 6 months for those pilots. Can you help us think through is it just the time to value on these Gen AI pilots is so much quicker that you think that these customers can convert that much faster? Yeah.
It is quicker, Mike. In one case, we might have to load all the data, model a supply chain, and build machine learning models that fit the scale of the enterprise of a Cargill, which is roughly $100 billion business, or the United States Air Force, which is a pretty big business. Okay, with generative AI, we don't have to do any of that. Okay, we just load their data, okay, into a deep learning model, okay, and it kind of takes the learnings from those data, stores it in a vector store, and we are the masters of the universe at aggregating structured data, non-structured data, sensor data, enterprise data, okay, images, what have you, into a unified federated image. We have 14 years of that. We're really good at that, okay? So that's easy, okay? And then, okay, all the mappings are worked out by one deep learning model, okay? They're stored in a vector data store, and then so we don't have these huge data science projects that we have at all these other organizations. So yes, the time to value is faster. The implementation effort is easier, and it's technically, honestly, it's an order of magnitude easier problem.
Awesome. Thank you very much, guys. I appreciate it.
And there's nobody who doesn't want to talk about it.
Great to hear. Thank you, guys.
Thank you. One moment for questions. Our next question comes from Kingsley Crane with Canaccord Genuity. You may proceed.
Hi, thanks for taking the question. Congrats on the results. It sounds like your plan is to invest more in lead gen, branding, market awareness, customer success. You've mentioned that you have more than 140 qualified leads in Gen AI. So it seems like you've done tremendously well in generating leads. So as we think about the incremental change to the profit guidance, are you balancing investment between customer success and pilot conversion with that of lead gen and brand awareness?
I'm sorry, what was the, how are we balancing between customer success and lead gen? Okay, a lot of this is branding and lead gen, Kingsley, is what we're looking at. Okay, kind of like we used to do in 2000 and 2021 when we established the brand for enterprise AI. That worked out pretty well. And we're going out to plant a flag, on this generative AI market, and we're first to market. How many companies out there have 28 enterprise generative AI solutions in the world? Okay, I know how many. Okay, exactly one. Okay, and we're going to communicate that. We're going to make it available. So that's what the bulk of it is. At the same time, if we have a customer in any one of these markets where we need to throw in extra resource to make them successful with their pilot, you can be sure we're going to make them successful with their project. And as we get down the learning curve, we'll get increasingly efficient at it. Okay, and gross margins go up.
Okay, thanks, Tom. That makes a lot of sense. And so if I could ask one more, hoping to gain some clarity on these 28 domain-specific Gen AI solutions. So, for example, if you're an oil and gas customer, you're building a solution in sales, and this is ultimately linked into Salesforce, is that requiring 3 separate apps? Like, how would that be consumed and priced?
Yeah, that'll be one. Basically, it's priced per CPU. That looks like one. It's going to be on a judgment basis, whether they're discrete projects or whether the union of them is one generative AI application. As you've described it, the union of them is one generative AI application. It'll be $250,000 to bring it live in 12 weeks, and after that, they'll pay 35 cents per vCPU hour or vGPU hour.
Okay, very helpful. Keep up the good work. Thank you.
And as it relates to when you get to runtime pricing, it doesn't really matter whether it's one application or whether it's 3. It's going to be the same amount of runtime.
Thank you.
Thank you. One moment for questions. Our next question comes from Pinjalim Bora with JP Morgan. You may proceed.
Hey guys, this is Noah on for Pinjalim. Thanks for taking our questions. So on the semi pilots that are active at the moment, if we exclude the pilots that have been extended 1 or 2 months, is there any way to parse out how many of the pilots are under production licenses? And then I have a quick follow-up.
Thanks, Noah, for the question. So I think at this point, the way we are looking at this, that there were 73 pilot deals that we've been doing, 70 are either converted or in the process of the pilot, or we're negotiating a production license on those. I think the meaningful amount or meaningful message you should take from this, that out of 73 pilots, we only have 3 no's. So we feel very comfortable and very bullish about how the pilot program is currently progressing.
Understood. And then maybe just to double click on the gross margins. I know you commented that with the transition to consumption.
Let me comment on the no's. The no wasn't that the pilot wasn't successful. Okay, the no, because I know these exactly what they are. Okay, and they were hugely successful. That's it. Well, what happened is the genius CIO, okay, went to the CEO and said, "Oh, well, we're going to build this ourselves out of a bunch of Tinker Toys." So let him go do that. Okay, he's going to go do that for about 2 years. Okay, they're not going to be able to. There are cybersecurity problems. They're going to have IP infringement problems. They're going to have data exfiltration problems. They're going to have random answers, and they'll be back. So the sales cycle there was just a little bit longer than we thought. They're not lost. They're just lost. They're just suspended. Sorry, couldn't help it.
No. And I appreciate the clarity. And just a quick follow-up on the gross margins. Just any way to kind of help us with our model going forward in terms of how to think about gross margins? I know you laid out some commentary about this quarter's impact, but just any additional thoughts there would be helpful for the year.
I mean, I think, Noah, that the punchline is that we're still expecting some margin pressure on it. And as there's going to be more pilots, it's going to be margin pressure until the consumption becomes a more dominant portion of the revenue stream, which would then offset it and start picking up the margin. So continue to expect some pressure still on the gross margin.
Thank you. One moment for our next question. Our next question comes from Sanjit Singh with Morgan Stanley. You may proceed.
Thank you for taking the question. I had one for Tom and one for Juho. Tom, and what's the vision around sort of multimodal? There's a lot of, interest around the language models. But as you think about the different diffusion models, video, audio, image, what's the vision around supporting those types of models if multimodal becomes the dominant deployment architecture for enterprise AI?
Are you talking about data, Sanjit?
No, not.
I'm not certain I understand the question.
Yeah. What I was referring to is obviously like the GPT models are language models and they've taken the world by storm, but there are other AI models that deal with image, audio, video, with other sources of data as we think of.
So you're commenting on the fact that these large language models tend to be almost exclusively limited to, text, HTML, and code. So other sorts of data they don't know how to ingest. Okay. Now
That's
we're
right,
doing.
yeah.
Okay. Good. Okay. Now so let's talk about this. We are the masters of the universe at ingesting what you call multimodal data, images. Okay, images from space, trajectories of hypersonics, high-speed telemetry, trading volume, the rate at which electrons are going across the grid, enterprise data, free text. And so we're using our standard architecture to ingest those data. Okay, we're using one of our standard deep learning models to basically parse over this data and store all the relationships in a vector data store. Okay, all the large language model we're using for is interacting with you and me. Okay, to handle the natural language, to understand what we're saying, and to take the answer back from the data and give it to us in prose. Okay, rather than some gibberish that might be spewed out of SAP.
Right. No, it makes perfect sense.
So that is one of the reasons why people find our generative AI solution attractive, is we're tried, tested, and proven at ingesting any kind of data they could think of.
Understood. And then the question for Juho is if I sort of look at the presentation and we sort of look at where we are in the sort of transition, phase 1, phase 2, sounds like we've just started sort of phase 2, and the graph sort of implies that we're supposed to get to revenue neutral by 7 quarters in. We're about 4 quarters in, and then revenue accretive about 8 quarters in, so about 3 or 4 quarters away. Is that still the timeline we should be thinking about in terms of revenue acceleration? Any color around that would be hugely helpful.
So Sanjit, the chart that you're looking at, I think you should think about this as a kind of a per customer basis, right? Like it's not necessarily the entirety of how our business is going, but the idea is that as we now have some of the original early pilots from last year's Q2 and Q3, they're starting in the phase 2 category. And as I mentioned on my prepared remarks, we have preliminary data on actual vCPU consumption for that first 3 quarters, and it's slightly above what we've modeled before. So we are in this 4th quarter of the transition, and we are starting to see some very positive indicators with respect to how the consumption will run for these consumption-based deals.
Got it. I appreciate the context. Thank you.
Thank you.
Thank you. And we have time for one final question. Our final question comes from Michael Curtis with KeyBanc Capital Markets. You may proceed.
Hey, thanks for taking the question. This is Eric Heath on for Michael. So I wanted to ask on Baker Hughes, two-part question. Just one, if you can give us some color on what changed with the relationship that they're no longer considered a related party. And then secondly, and I hope this isn't too nuanced, but if I take the $16.5 million of Baker revenue contribution for 2 months in the quarter and kind of extrapolate that out for an additional month, I get about, I don't know, $24 million versus what we were thinking around $20 million. So I guess my question is, how did the Baker Hughes contribution in the quarter compare to your expectations? And any way to understand how the non-Baker Hughes business did relative to your guidance? Thanks.
Well, first of all, Baker Hughes is not a related party because they monetized some of their stock. Remember, they bought some stock some time ago for about $3, and they sold it for, I forget what the rough number was. I could be off by $1 or $2, I don't know, but for nothing. Okay, and they sold it for a lot, so it's a pretty darn good trade. Okay, and today, because they own less than 5%, by definition, they're no longer a related party. As it relates to the Baker Hughes revenue, he should actually know that. Didn't we provide that in the memo?
So
In other words, that we wrote like 3 quarters ago.
that's right.
I mean, I'm sorry, I forgot to ask the question.
What was your name?
Hey, Tom, it's Eric from KeyBanc.
Eric. Okay. Yeah. No. We actually. It's on our website. It's on our IR site. You're going to be able to see what the minimum Baker Hughes revenue is. We provided you that in great detail, and it's on the IR site.
Anyway, just kind of quickly frame how it was in the quarter relative to your expectations, the contribution. Sorry if something I forgot to tell.
It was exactly what we expected.
That's right. It was in line with what we expected.
Exactly what we expected.
All right. Thank you.
Thank you.
I guess that was our last question.
Ladies
and gentlemen, so Tom and Yuho are out. Thank you for your time. Thank you for your attention, and we look forward to providing an update at the end of our second quarter. So thanks a lot. Stay tuned, and hopefully we'll have some exciting things to report.
All right, guys. So that is it for C3 earnings. A very slow earnings report, kind of a red day. A lot of people are probably nervous about the market, and that's all good. I'm going to go hang out with the family here. Again, if you want to check out Top Step is a funded program for futures. They give you a demo. They test your skill. If you can hit the target while following their rules, they fund you between $50K up to $150K with a 90% split in futures. And there's no PDT in futures. You can day trade short the S&P, the NASDAQ, currencies, future contracts, gold and silver futures contracts. And, it's just really useful. Again, it's $49 a month, very cheap. If you lose, it's not the end of the world, but if you're good enough to pass it, you can get some funding. They are a sponsor of mine. I'm definitely biased in their favor. I'll see you guys later. Good luck. Y'all be good. I'll see you guys bright and early tomorrow morning for jobless claims numbers tomorrow. I'll see you guys then.